The debate over how the government spent 250 billion shillings it raised from the country's maiden sovereign bond rages on. And the National Treasury is on the defense. In a press release, the Cabinet Secretary to the National Treasury, Henry Rotich, has maintained that all the proceeds of the sovereign bond issued in June 2014 and the subsequent tap sales in December 2014 were fully accounted for. According to the statement, transfers of monies raised from the bond to fund local infrastructure projects began on 30th June 2014 when 34.6 billion shillings was first released for spending. Another 65 billion shillings was transferred to the Exchequer between September and October 2014. On 21st January this year, an additional 25 billion shillings was released, followed by an equal amount in March. Another 30 billion shillings was transferred to the Exchequer, with the last transfer of Eurobond funds having been recorded on 30th June when 17.2 billion shillings was released. All these transfers to the public coffers totaled nearly 197 billion shillings. The remaining 53 billion shillings went towards the repayment of a syndicated loan that was obtained in 2012. The Eurobond proceeds that were received by the Exchequer were distributed among 14 government ministries, departments and agencies. Among the biggest beneficiaries of the funds were the State Departments of Infrastructure, Planning, the Ministry of Energy and Petroleum, Water and Irrigation, as well as Agriculture. The National Treasury, however, did not list the specific projects that were funded through the proceeds of the Eurobond. And in a statement sent to newsrooms, CORD leader Raila Odinga has cast doubt on whether the government had the capacity to spend the funds raised through the Eurobond, saying, and I quote, "Kenya's economy cannot absorb that kind of money in 1 year. It is too much. If it was used to build infrastructure, we will be seeing those infrastructure developments," unquote. But speaking in Kwale County, Deputy President William Ruto dismissed the opposition leader's claims.
Hakuna pesa zozote zilizopotea either kwa Eurobond ama kwa zile pesa zingine zote tulizokusanya kwa ushuru. Pesa hiyo tunatumia katika kujenga na kupanua maendeleo katika taifa letu la Kenya. Wale ambao wanaweka mambo ya bure na siasa duni na uongo ya kwamba pesa zile zimeliwa, pesa zile zimepotea, ni watu ambao hawana ujuzi na hawana namna hata ya kuhesabu pesa kidogo.
And as to what impact the Eurobond had on interest rates, the National Treasury CS has said the Eurobond stemmed the government's domestic borrowing, thereby easing pressure on short-term lending rates. According to the CS, interest rates on the 91-day Treasury bill, which is reflective of the government's cost of borrowing locally, declined from 9.8% in June 2014 when the Eurobond was issued to 8.3% by June this year. Today, partly owing to the tightened monetary stance that came in the wake of the central bank's efforts to stem the weakening of the shilling against the US dollar, the interest rate on the 91-day Treasury bill is at 19.47%, down from last week's 22.1%. How soon this will translate to a return to lower interest rates remains to be seen. Stephen Kimani, Citizen Weekend.